Hey guys, it is Sunday, April 14th, 2024, looking at crude oil. This is my personal video trade journal, not to be taken as advice. All right, so as per the usual, we look at the longer time frames first and then drill on down, looking for something more actionable. The elephant in the room right now is the geopolitical news, potential catalyst. All right, so looking at the daily, what's interesting to me is how price has been interacting with these supply demand zones. And then it also, there's some confluence with these fibs here. Mainly price got above the 618 and then is now back testing it and holding it as support. And these other blue fibs just are covering this structure to the top here. So we've already been poking above the 886. I don't know, to me, it makes a lot of sense that regardless of Elliott wave or counts or any of that stuff, that they would just come up and try to at least test these highs. But now with some geopolitical catalyst potential on the horizon for the open tonight, this seems to be the heavy resistance area. I had this all the way up until recently. This was the heavy resistance down here, but obviously that's history now. So this is where I see the next. I mean, it's just common sense, right? Like look to the left, supply demand zones. We get the information from the left. Price has memory, clearly. Price has memory. So, it knows that these wick is up here and this is an area of heavy resistance. So remember this, 91, 92 to 93.74, because that area is we're gonna have some confluence with fibs up in that area. All right, in a second we'll get, here it is. So looking at the 4 hour, without getting too in the weeds with the Elliott wave stuff, just looking at this supply demand zone up here, and if you imagine that this is the ratio of wave 1 through 3 versus 5, this is where that ratio lives. And wouldn't you know, 91.50, 93.19, somewhere up in here. That is not too dissimilar from this natural area of resistance. So there's some confluence here. And also, if you look at, just look at a little more detail, looking at the 1 hour. So if this is going to morph from a leading diagonal for wave 5 versus an impulse for wave 5, then again, there's some confluences up here. If this is really a 1-2 to start wave 5, then not only is there confluences with my supply demand zones here, because these lines right here, 89.46 and 91.51, have nothing to do with LA wave. They're based on price action way over to the left. And these supply demand zones, it's the same thing. So isn't it crazy how the 1618 just comes in right there? So to me, that's interesting. And then same for the ratio box. You're getting above this level. And there's targets here and there's fibs there. So the ratio is there, the fibs are there, there's supply demand zones along the way that make sense. So getting a little bit more detail. Now I'm in the weeds, and this is where it turns into word salad. But that's just the way it is. We're living in the game. It's the game of potentials and probabilities. So if it's a diagonal, the idea is, we gap up and then we get up here and then it gets rejected. Then you finish off this wave 5 as a diagonal much lower, meaning somewhere in this area up in here. Whereas if it morphs because of geopolitical catalyst into a straight impulse, then these are the targets here. This is wildly speculative, but just looking ahead, looking forward. So if this were to come up as a bona fide wave 3 and wreck the diagonal potential, then it should hold support for wave 4. And then the final target, again, it just lines up so beautifully with this ratio for where wave 5 should be of this larger structure, which is still a small degree structure. But the point is, this is where you could expect it to terminate. And it just lines up so well. Like just take, if it goes to 2618, which is common as a final wave 5 of a smaller degree structure, 92.65. And then you look at where that is, 92.65, man, it's right in this zone. So I like it. But at the same time, price can do anything it wants. I'm wrong all the time, wrong a lot. And then just as a shout out to my man Armando in Miami, who's got a trading club, just a great guy. He's beat me over the head to get me to size down, and this year I've been doing that. So I trade much smaller size than I used to historically, and I'm having more consistent results. So What I ended up doing was going long one micro lot. And then as it came down more, I added another micro lot. And then at the end of the day down here, I added a couple more micro lots. So I'm not even a full-size CL contract, but that is allowing me to be in this position. And my basis, I'm underwater, and my basis is like 86 and change. It's like somewhere in here. Call it 86.07. My basis is right in here. So, small size, taking heat, but that's the idea. So, my plan is take off half of what I've got on. If I'm lucky enough to see 89.46, half comes off, and then the rest will come off 91.53. But, anything can happen. That's what I got, just sharing because it's fun. Let me know what you think. What are you guys doing? My stop is obvious, down here, below 84.55, and, I'm just dead wrong, and something else is going on. So we'll see. All right. I got a gig tonight, so I won't be watching at the Open. I hate that when that happens, because tonight would be a good night to watch the Open. All right, see ya. Bye-bye.